G'day guys, I'm David here from the Xylem Zone again. Just thought I'd check in with one of the cons of property investing, and again I've been on this theme of off the plan, and as you can see, a big tall one right behind me there. But many people get, we're going to say the word lured into off the plan because they think it's a strategy where they're guaranteed to make money because they buy something now and they don't really know all the pitfalls and different variables that can go wrong. And the one thing I want to talk about today is lenders mortgage insurance. So not too many people buy a property for cash these days, so most people are reliant on getting a loan to do that. And of course each loan bank has their separate lending rules. But generally, when you go up to 80%, where you put in a 20% deposit and the bank gives you 80% of the funds, the bank sets the rules and they can give you the yes or no on whether they approve the loan for your situation or not. But with most investors generally go to 90% for their loan, which means they fall into the territory of lenders mortgage insurance. So what does that mean? Well, lenders mortgage insurance is the insurance that the bank is taking out to cover their risk in giving you the loan. The difference is, with insurances in our own personal lives, you know, if there's our own home, we pay for building insurance. If it's our job that we've got a concern about, we pay for income protection or life insurance. But in the case of the banks, they actually get you to pay for their insurance to cover their risk. When I first heard that many years ago, I thought, gee, that's a bit of a scam. Let me talk to the manager because I want to dispute this. But he made it very clear very fast that that's just the way it is, like it or lump it. If I wanted the loan, those were the rules. So then it's a little bit of a pyramid. You've got your brokers down the bottom and you've got your mortgage managers, and then you get to your banks, and obviously right at the top sits the mortgage insurers. And in Australia, unfortunately, we've only got two of them, Genworth and QBE. So they then insure that extra loan. So that means there's a second level of scrutiny on your loan application where you can get knocked back on getting your loan approved if for some reason the mortgage insurer also deems the property a high level of risk or not. So what can that do for you? That also can mean that you may have to put in, there may be a devaluation in the valuation, or that you just get declined and you've got to go and start again. So mortgage insurers have a big impact on the lending process, and you have to be aware of it because they're also looking at things like what area is the property built in, what is the type of asset, and they may have different areas black marked where they don't want to give lending because they already have too much exposure in that particular property or that suburb, or in this case, as behind me, they might not like high-rise apartments and want to be giving lending in that type of asset whatsoever, especially if the market's in decline. So what do you do beforehand? You can go onto some of the bank sites, and they've got calculators where you can go and check postcode zoning, and that'll tell you, generally give you a guideline of the LVR that banks will give you in those areas. And obviously talk to the bank beforehand that you're dealing with, or the broker, and just get a bit of a feel of what the mortgage insurers are doing with that property in those areas. And another good thing is, remember we talked about in our previous video, get your valuation done up front and get some feedback on that before you jump into the next level, but know that mortgage insurance is going to be a factor that you're going to have to deal with along the way. So anyway, that's all about the money you've got to put in. You don't want to be in a situation where you're only planning for 10% and all of a sudden, because of mortgage insurance, you get your loan declined, or a combination of that mortgage insurance and valuations mean you've got to put in a lot more money than you expected. Anyway, that's it from David today from the Xylem Zone. Hope that's been helpful. Make sure you check out LMI, that's the abbreviation, and understand that process before you jump into the deep end. Thanks again, have a great day.